We better figure out the people side first, because without the people, there can be no clients.
Yep.
So we really flipped the industry on the head. Our mission is enhancing prosperity. Because we're CPAs, most people will look at that and think it's about the money, but it's really not.
Welcome to Decision Points. I'm Doug Hudson.
I'm Scott Wood.
Man, welcome Teryn Grater, owner and partner at ATKG Advisors in San Antonio, Texas. How is the Alamo City these days?
Little old San Antonio's great compared to all these other big cities. I love it.
Little old San Antonio, come on.
That's how we like it.
It's not that little anymore.
Not anymore. It's doubled since I've moved there. So,
When did you move there?
34 years ago.
Yeah.
That ages me, yeah.
Yeah.
We don't like to talk about that.
It's
It's a great town.
I mean, all of Texas, but I guess, too, San Antonio is just blowing up.
Blowing up.
Yeah.
Blowing up.
What do you like about it and what do you hate about it?
You know, the reasons I moved there straight out of college was that it was big enough for good business,
Yeah.
but small enough to be super livable,
Yeah.
and still holds true today.
Still livable.
Still livable.
Yeah.
Very livable. Yeah. So it's a great town. I raised 2 kids there. Love it. It's
Yep.
wonderful.
Tell us about your kids.
All right. I've got 2 fabulous daughters who are definitely way smarter than their mom. And they're both in college at UT Austin.
Okay.
And great. Both scientists, decided no business.
Great.
No business in their life after watching dad who does what you do and mom who's a CPA. They're like, forget that.
That scared them
We're
straight.
going to science. We're going to science. So yeah, so they're awesome and wonderful. But
What do they, you know what their aspirations are at this point?
get through college. Get through college and start life.
Yeah.
Life, right? That's what's on their mind. Right?
Yeah.
So they're getting there. They're getting there.
Yeah, that's awesome. Where'd you go to college?
I went to the University of Arizona.
Where?
So
Did you grow up in Arizona?
No, I grew up in Portland, Oregon.
Okay.
And
You wanted
left
to
as
go
fast as I
to the
could.
sunshine?
And only because of the rain. Exactly.
Yeah.
And so then, my mother had done a great job of always setting an expectation that I will be going to college.
Yep.
And so I graduated pretty young, so I was 17. And
Oh my goodness.
I hitched a ride with my ex-boyfriend's parents who were driving down to Arizona. And I said, could I get a ride to college? And they said, sure. So I hitched a ride down there because my cousin had told me they have a good business school.
Okay.
Great. I'm out. I'm there.
Perfect.
So went to Arizona and then realized maybe that wasn't going to be my long-term place to live.
Yep.
And I had visited Texas and just thought it was a nice combo, especially San Antonio, like lots of lakes and rivers and trees.
Yeah.
And,
Oh yeah.
warmer, but
Yeah.
not as rainy, but still outside stuff to do. I like to be outside. So,
Yeah. Did you know you always wanted to be in business?
absolutely not.
Huh.
I knew when I went to college I should go in business, but I didn't know what.
Yeah.
So just all my jobs that I'd ever had from the first legal one, which was Dairy Queen.
You had a legal job at Dairy. Oh,
Well,
legal
versus
job.
real
job.
W2.
Yeah.
Come on.
First job was Dairy Queen, and somehow at
Portland?
15 in Portland,
They had Dairy Queen in Portland?
Dairy Queen, not in every town like in Texas, but
What was your favorite blizzard?
I mean, Butterfinger. There's no
Come on, seriously?
question.
That's
Seriously,
the only one.
It's the
And
only one.
today, could you make it and turn it upside down?
Probably could still do the thing. Yeah,
What's your favorite blizzard?
Heath Bar.
Yeah.
that's
Carrie's a big Heath bar. Yeah. Interesting. Yeah.
Yeah.
but somehow at 15, I was the one balancing all the registers at the end of the night, and all the other cashiers were like, "Hey, can you come fix this? We don't know what we did," and I
You could figure it out.
figured it out. So they invited me to be the manager at 16, I think, and I was like, "I think I'm going to go to college. I think I should go to college." So looking back,
Good
I
decision.
probably should have stayed, become the owner, bought 10 more franchises, and been a Dairy Queen franchisee
True.
years ago. But so I knew business. Then I had other jobs, and I always ended up like the numbers kind of made sense to
Yep.
me, and I could do stuff other people couldn't do. So I knew to go to business school, and then somehow accounting I passed the classes when everybody else was not passing the classes.
And that's at Arizona in college. You're
was in
passing
college.
accounting. Yep.
And other people are not passing, and I figure, well, I guess I must be pretty good at this, so I better keep doing this.
Yeah.
So I did.
So you graduate with an accounting degree,
Accounting degree.
and then at that point, automatically you knew you were going to go study for the CPA exam and all that.
Yeah.
All right.
Yeah, for sure. Somehow I took most of it in college still. I passed most of it while I was still in college.
And then did you get recruited by a firm to go to San Antonio, or did you just move to San Antonio?
I got to Texas. Well, I used to have a boyfriend that was in the Air Force in flight training in Del Rio. So I had visited San Antonio.
Mm-hmm.
So really, I just called up the big 8 and said, you should give me a job. And about 3 of them said, okay.
I bet they did. Yeah.
I said, sure, come on out.
Yeah.
And so I started with Ernst & Young straight out of college, and it was a great experience. Loved it. And was there. Well, I went to tax, first of all. That's the big difference, tax versus audit, right? So my theory of that was, if you're an auditor, your clients don't really like you that much. You're like, they have to have you, but you're not like an advisor.
The auditors are here.
And that, right.
You just kind of tolerate it.
But you figured that out? You knew that?
I said, if you're the tax guy, the IRS is the bad guy, and you're the hero. So I'm tax all the way. Which,
so you were showing your business savvy even in the choice of the direction you were going.
Looking back, I could, I do, if you know the Strengths Finder model, we follow that at the firm, and strategic is my number 1.
Is
so looking back, I can see there were times that strategy really came into it.
100% it did.
So yeah, I liked being the hero, and it's been great. And now looking back, I can also say it's also the most expensive thing anyone will ever spend money on. Mm-hmm. So from a business owner perspective, having a tax advisor that you trust and invest in pays for itself.
Yep.
So it does help me sell my services a little bit better too.
Yeah, 100%.
In my opinion. So it's been a great decision. Maybe not for the right reasons, but I think it still holds true today.
Nah, that sounds like a pretty smart reason.
So tax.
How long were you at EY?
I was there for 5 years.
Okay.
And then I had a client who sold their business for $1.1 billion cash and asked me to come work in their family office. And I thought, well, I'll probably learn a bunch of new stuff.
What year was that?
1995.
Okay.
Wow.
So I did that.
And part of the reason I asked that question is because, like, in 95, there weren't a lot of family offices. I mean, obviously.
Especially in San Antonio.
Yeah, and if you net $1 billion, obviously you qualify.
And they were a client of mine. And they sold. So went to work in the family office and quickly realized not my favorite thing to do. That whole like day-to-day accounting, not really that much fun. And there's a lot of opportunity for really future forward planning. I was not the investment person in the office. I was accounting, tax, IT. You end up doing IT, HR, all the really things that
you were a necessary
really don't want
evil.
to do. So in the meantime, got married. He's from overseas. We needed to either go back or pay back his schooling. And I was like, we definitely should go back. I love to travel. I'm very adventurous.
Yeah.
We hadn't figured that out yet from the pick up the suitcase at 17. So moved to South Africa and worked for Ernst & Young. Well, actually, for 2 years, I still worked for the family office remotely and coming back and forth. And then went to Ernst & Young there in Johannesburg and worked for corporate finance. They didn't need tax people.
Yeah.
Tax code was very simple.
Yeah. They
had 1,000 auditors and 10 tax people. Had no need for tax people. Had about 50 corporate finance people. So I joined the corporate finance team.
Interesting.
They graciously paid for my MBA. I was there.
Yep.
That was nice.
Oh, no way.
Learned all sorts of stuff about M&A and, due diligence and valuations and things that come in very handy today in my practice.
Yeah, dig into those for a minute, Teryn. I mean, what are our audience or business owners? And so you start talking about everything you just mentioned, that's where they live every day, and they want to always be drafting off of pros. We talk about it often on Decision Points. A mistake or maybe a blind spot to business owners, they're doing this often once. Now, if they manufacture tires, they do it every day. But when it comes to running or selling or valuing a business, they might do it once. You've seen it 10,000 times. What are things you were learning at this point in your career, valuation, tax, corporate finance? What are lessons you're learning that would help business owners?
It's hard for me to remember what I knew then versus what I know now.
Okay.
But now I would, it's going to sound kind of biased coming from a CPA, but The mistakes I see people making often are they're doing their accounting a year and a half later to file their tax return instead of to run their business. They're not using their financials to manage their business and to make more money or lose less money or understand if this widget is profitable and this one is not because they're only seeing a net number or this division or this location. Like they're just not granulating their data enough. So that's number one. They're often trying to do too much themselves, right? They're wearing all the hats. They don't back up early enough to let somebody else handle it. We know it costs money, but you can make 10 times that. Go doing what you do. Let somebody handle some of this stuff. Tax errors for sure are the biggest ones that take people under are payroll tax problems, sales tax problems that you didn't get professional help on early enough, and then they come back and bite you real big. And then also just, you want to know what the exit is before you even get in it in a perfect world, right? You have a pulse on the market. You know when's going to be the right time to sell. Or, I do a lot of succession planning work as well. Are those kids really going to want to be in the business or not? So I'm a pretty, I'm not scared of a difficult conversation. So part of my practice is really forcing my clients to have those conversations early and often. And they may tell me no for a little bit, and I'll let them get away with it for, a year or two. But after that, like that poking goes because there will be a transition.
Yeah.
And so do you want it to be planned or do you want it to be unplanned?
Right.
And we all know it goes a lot better with a plan. Even if it's plan A, plan B, plan C, and I don't know which is going to happen, you can't just bury your head in the sand and hope it's going to go well. That's just not how it works. So, whether it's an untimely death, or just the market crashes or whatever is going on, it doesn't work. And almost always the first deal is not the deal that gets done. There's exceptions to that rule, but it's very rarely that that's the case. So, and then the last one that really comes to mind is, something that worked for us. I joined the firm I'm at when we were about 7 people, and we're at 170 today. Early on, I happened to run into somebody that offered some business coaching, like trial period. So we tried it out, and I was like, sold. This gets the owners in the room talking about the business, working on the business, and not just putting out client fires, which I could do 48 hours a day for the last 24 years. No problem. It gets you working in the business, on the business, rowing the same direction, so you have a cohesive message. So using a business coach or somebody to facilitate, some of that thinking and strategic thinking to really help you. Changed our business. We probably started it 20 years ago, and we've run through different coaches, different models as we've grown, because what got you there isn't going to get you to here, right? So I think I saw maybe you guys are running EOS, which is what we went to about 5-6 years ago.
Yeah.
And
you currently still using EOS?
Still on EOS.
So we're huge fans.
And at about 50 people was when we probably went to EOS. Yeah, super helpful. But that accountability, essentially, processes and models to help you have accountability and get things done, right? Figure out what's your priority instead of scallywampus everywhere, which is what you can do, right? You can run around with your head cut off all the time.
Yeah.
Oh, there's plenty of time to do it. Exactly.
There is. So those would be the things that, just as looking back, just, invest in the right partners, because then you can do what you do best. Get coaching, get a facilitator, depending on the ownership structure, but especially if you're on your own, how can you see everything? We all have blind spots.
That's right.
So
it's huge. All right. So you're in South Africa and you're working for EY. How's that transition back? And do you, walk us through that season?
Okay. Such interesting questions. So was in corporate finance. South Africa was doing well at the time. It was actually, I moved there in 95, 96, so just a couple of years post-apartheid at that time, to be honest. So very interesting time, fascinating country. Business is good, But because South Africa was considered an emerging market, I'd be working on deals. And because something happened in Kuala Lumpur, my deal dies overnight. I mean, one time I literally flew to London to present to a board on the acquisition they were making. And before I got off the plane, my deal, and they said, just turn around and go back home. I didn't even make it to the boardroom. That's no fun.
Yeah.
So in the meantime, we were talking about having children, and we thought economically, long-term, we're probably better off financially being based in the U.S. with maybe still being able to split the year in some regard, but maybe earning in the U.S. versus the rand that could devalue at any point in time. So decided to come home. Also had no kids, so said, well, maybe we should travel for a year first. So backpacked South America, some in Europe because we had some friends, and we pretty much visited anywhere we knew anybody in the world.
It's awesome.
It was Europe, South America, and Africa. We drove from South Africa to Kenya and back.
Wow.
That is so cool. This is because you normally, that's like after college type stuff.
Yeah,
But
here
you
I
guys
was
are young.
30
Yeah.
now, yeah.
Yeah, and you've got 10 years into your career.
Yeah,
And
it was interesting.
very cool.
Yeah, it was
You did that for a year.
Did it for, just under a year. Went a few places, or at least one place that was illegal for U.S. people to go to, but it was fun. Saw the world. It was amazing. So I love seeing the world. So I'm a big traveler.
Yeah,
Probably been
clearly.
to 35 countries at this point, something like that. Got back here. My best friend is a partner at the ATKG as well.
Yeah.
We got back in January, and she was having twins on January 15th. And she had asked me if I'd help out for tax season. So I said, sure, at this firm of 7 people, which I thought would just be helping out for a couple months because it's a little firm, what kind of clients could they have, It was,
I'm a big firm gal.
Yeah.
I'm a big firm gal.
Yeah, exactly. Clear. Yeah, well said.
So helped her out. It was a totally different kind of tax than I'd ever done, to be honest. And so I was definitely doing more corporate and, just bigger stuff, bigger entities. Anyway, but at the end of the day, it was awesome. And so I dabbled with some other part-time things, trying to figure out what I wanted to do. And in the end, I bought into the firm, and we've just been growing it ever since. So I've been in business with my best friend for 24 years.
Nice.
It's been awesome. And of course, half the people said, oh my God, don't do that. You'll ruin your friendship. And the other half said, that'll be great.
Yep.
And it's been awesome. She's amazing. So, so I've been there 24 years. It's been
very cool.
And how long had the firm been up and running and operating when you joined?
20 years.
So it had been there 20 years, and so it was 0 to 7 people in 20 years. And then in the last 24 years, 7 people to 170 people.
170.
So what changed? What was it you? I mean, were you a large catalyst in the, hey?
I was. I mean, we were one of 2 partners. Well, we were 3, then we had to ask one to go. Then we were 2, and then it's just been a subsequent.
So your best friend was senior person.
Why did you all decide that you had to ask that partner to leave?
That partner, so it was not the founding partner at all. It was
the founding partner was kind of sunsetting.
He was sunsetting.
Yeah.
Okay. 100%. The partner that we had to ask to leave was a value issue.
Yeah.
It was a trust issue. Something came to light where clearly there was not the truth being told about things, and it was a real risk management issue for the firm. And so, to be honest, I was the last partner in. So I went to my other partner and said, look, I'm happy to go, but I'm not going to be partners anymore. And once the situation came to light, she felt very much that I should stay and somebody else should go.
Yep.
So negotiating that was probably one of the more stressful, things I've ever gone through. It's very difficult. I mean, it's a divorce. It's a business divorce, right? Attorneys and all that. But best thing, that we needed to do it for the growth of the firm. I was still buying in at that point. I'm not going to be paying every month to be drugged backwards.
Yep.
Absolutely not. So I could see the opportunity that we had. I mean, just sure you've heard there's a shortage of us out there that do this, that have the kind of weird brain that makes this work. So, both tax and accounting, but specifically tax, there's a huge shortage. So I saw the opportunity that we had in the market. It was unlimited, still is to this day, to be honest. But I wasn't going to do it when I wasn't sure what the outcome would be. We were with partners. I went into it thinking, you don't have to be best friends with everybody. True. But when you're that small, you really have to be value aligned.
Yeah.
You have to have value alignment. So saw that we could really build this and grow it. The unique thing about the firm that still holds true today, and the founding partner had done this. He was a professor actually at one of the universities, and he was holding a seminar, and some people asked him to take them as clients. So he started the firm just because he had that. But firm's always been very niched around wealthy families and, high net worth families and closely held businesses and what their needs are. And so that market's just limited for us, it feels like. So just wanted to carry that on and have never had a shortage of clients.
Yep.
But what we realized, probably decision point code talk here, is that, boy, we better figure out the people side first. Because without the people, there can be no clients.
Yep.
And I can't service the clients, or it'll be this revolving door of clients. I can't keep clients happy. So we really flipped the industry on the head, to be honest, and became people focused. And the clients will come.
Yep.
If you do the right thing for the people. The other big difference was, most of the firms are still, men.
Yep.
90% of the partners in CPA firms are men. And so we were able, I think, just through our networks to really attract and retain, I think, women that would have left the industry. Because it's got a terrible reputation. Right?
Yeah, sure.
You're going to work all the time. You're never going to see your family. God forbid you should go to a concert during school hours and miss work. In fact, have a story about a new employee we got that made me cry a couple of weeks ago because of her story for quitting her prior job and the drama that people were giving her to go see her kid.
Yeah.
It's just not necessary. We're all adults. We're all
so short-sighted.
It's so short-sighted. So
and mean, but it's just short-sighted. Yeah.
And so I think we were able to really flip that. But one way we did it is we really restricted the clients we took. So we said, we're going to be niched on this because then, we're going to work on bigger clients because their needs are year-round and not these massive peaks and valleys of tax seasons that make everybody's life livable.
Yep.
We want to do hard, fun, challenging work, but we don't want to do it 80 hours a week. Why would you?
Yeah.
I've gone to conferences nationwide and been the only female in a 100-person room where everybody's complaining about everybody's work ethic and, boy, nobody wants to work these days. And I'll raise my hand and say, well, why do you think it's rational that everybody should want to work 70 hours a week? And I think some of it's just historic in that most of the people running firms today, their wives were at home with their kids, but, for the most part. And that's changing slowly, but it's just they just don't have the perspective of trying to be a 2 working parent home trying to raise kids, and I don't think it should have to be a choice. I think there's plenty of, especially with technology these days. I know I log back in when I need to.
Exactly.
Or I'm on the road somewhere, I'll log in and get what needs done. But we have all those options now that makes it easier. So I don't know why it's still such an issue, but it does seem to be.
So interesting. Even when you say that, Teryn, that it's changing slowly.
So slow.
It doesn't really want to register with me that it's crazy that it's still changing slowly, but it's you're in it every day and you know that it's still changing slowly.
And the mother of 2 daughters, I'm mortified that it's 34 years after I started my career. It is such a slow change. I hate that for them.
Yeah.
I hate that for them. So.
I want to go back to something you said a minute ago, Teryn. You said there's just not that many people that do what we do. What's that mean?
There's not enough.
Okay.
How about that?
Yeah, well, because in my mind, there's a bazillion accountants out there, and I have some place to go with this thread here that we're on, but I want you to answer, when you say that, what do you mean? Like just
I mean, there's a talent shortage.
yeah.
There's a talent shortage in accounting. There's a talent shortage in tax for sure. And
So is it a people, like numbers of people, or is it a competency?
numbers of people for sure.
Yeah.
And I think it's a lot because there's been a lot of drain of the talent over the last 20 years now. People just like, well, I'll do it for 5 or 6 years. But the minute I'm going to have a family, I'm going to go do, I'm going to go work for industry, which isn't always the grass is greener situation people think it is. But, public accounting is notorious for the work hours and just being brutal. You learn a lot.
Yep. Go do your 5 years and then get out.
And then
go work for a client.
And it does not have to be that way. You just have to find the right firm. And firms are changing slowly but surely. We were just lucky enough to kind of long ago figure out that we're going to focus on that, which means we can retain our people. So we have really good retention rates with our people compared to industry, like really good. And then we just also, we made it fun. Like, I mean, I know that sounds contrary to popular belief.
CPAs can have fun.
CPAs
They really can
have fun too. So we made it fun. We made it, teamwork. And, we really, so a couple of examples of that, if you want them, are
love them.
Given my adventurous nature, long ago, I created a bucket list program where I'm not in charge of it anymore, so I'm not sure how many were given away, but we get, at the beginning of the year, we have everybody give us 3 bucket list items. And we do drawings all throughout the year at random.
No way.
Out of a big bucket of where you're going to go. So we've had people do all sorts of cool stuff.
So a team member, start of the year, puts in their 3 bucket list locations, travels, whatever.
For the year.
And however many times or whatever, you go into this bucket, physical bucket, and you pull out Doug Hudson, and he says, Pebble Beach. You send that team member to Pebble Beach.
Correct. We give them a certain amount of money to spend towards whatever that was. Yes.
Yeah,
it's not unlimited budget.
It's freaking awesome, though.
Yeah.
Yeah, I mean, we work hard, but sometimes people need a little push to kind of get their brain thinking about what else could I be doing.
So Doug Hudson has 3 bucket list items in the bucket. So these are individual pieces of paper, right? Or
your business card with your thing on it, yeah.
So he has 1 business card in there with 3 things on it.
Or one business. Somebody decides which one they're putting in for you. Somebody else decides which one you're putting in.
Okay. So once Doug's been drawn, he's out.
He's out for the year, for a couple of years,
Probably good. That's
we have
fair.
A lot of people to get through.
That's fair.
Okay. Yeah. That's where I was going, is like, how do you get to everybody?
It's hard to get to everybody. Some people have been there the whole time and haven't gotten it yet.
Yeah.
And other people just started last year and they already got it. So, And then the other thing we did was we have a Walkabout program. So if you've been at, we have plenty of paid time off already, but if you've been there for 5 years, you get an extra 2 weeks, has to be contiguous, to get the heck out of there and go do whatever you want to do. If it's 10 years or 15 years or 20 years, then it's a month in addition to your regular PTO. And twofold, a lot of firms will do that, but they'll do it for the partners only. Mm-hmm. So for us, the whole firm, doesn't matter.
It's tenure, it's 5 years. Yep.
Doesn't matter.
Yep.
And a couple of reasons for that. One, it gives people a real break, right? Without using their whole vacation for the whole year.
Yep.
It gives them a real break. Number 2, it's better for the business because no client is depending on any one person. No process is dependent on any one person, right? It's better for the business. Our business is somewhat cyclical, so you can't go in the middle of tax season. But, we've got some blackout periods there. But in theory, we all can just pitch in and help, and then we each take our turn. So, and it kind of forces the clients to really know the whole team and not just me, for instance. So
it's phenomenal. You guys absolutely aligned. I think I can hardly imagine a business owner like yourself or our listeners who wouldn't say it's people first. But if you peel the onion back,
great.
Do their policies, do their incentives, do all those things align with that? clearly you've given us two very creative and thoughtful processes that show that. And to be candid, Teryn, I love the idea too that you say part of the motivation is every single position has redundancy around it. Mm-hmm. That's a scalable, sellable business when you can get hit by a bus or retire or move to wherever, and the business is going to keep rolling. I mean, that's thoughtful. You guys done a great job. You were going to keep going.
Yeah, so I want to go back again to this. There's not enough like us, right? So one of the things that I think comes up with CPA firms or CPAs in general or advisors in general is, and it's probably more tax practitioners than it is advisors, right, to delineate. They're on the treadmill, right, the filing treadmill. April 15th, and there's a...
You're looking backwards always.
And there's a foundation filing deadline in June maybe, and then, or nonprofit, or, maybe. And then there's obviously October, and then, so like just moving from one filing deadline to the next, processing this massive, package of returns for people, and there's rarely an opportunity to like put all that work aside and go, okay, let's be strategic for a moment. How do you guys think about that?
You have to constantly create that opportunity. I mean, EOS is great about that quarterly, right? You're reevaluating your priorities quarterly and what you're working on your 1 year plan and your rocks for the quarter. And I mean, that's a great tool to make that, but you just have to do it. Otherwise you're...
And how do you guys think about that in relation to your clients and being strategic, not just being a processor of returns, but being strategic in your relationships with your clients?
Yeah, I mean, the tax return is something that happened last year. I mean, you're just reporting, look, there actually is a lot of value you can add in the compliance because you come up with a lot of planning in that can be forward-looking. But it's really getting to the other parts of their lives that, I mean, you have to file compliance, right?
Yeah.
Most people don't want to go to jail or get penalties or pay interest. Some clients don't care that much about it, but you have to do that stuff. But really what that stuff does is it tells us what's happening, right? It tells us where the cash flow is. It tells us where the bodies are buried. It tells us where the illegitimate kids are that have the trusts that we found out about. It tells us all the things. Our mission is enhancing prosperity. Because we're CPAs, most people will look at that and think it's about the money, but it's really not. So a big part of what we do is also risk management for our clients. So it might be the succession planning, it might be estate planning to save that 40%, each generation. But it's really, forcing our clients into more of but once we know the base, then we can ask better questions about where are you going, what are you doing, where are you trying to get your family. So it's not uncommon that I get a new client, and after I get to know them a little bit, which normally happens through some of the compliances, then I'm like, okay, now I'm ready to talk about what you really are trying to do. So I need to know if you're planning to sell this business in 5 years, if you're going to do an IPO, if you're, do you want to buy a ranch, out in Fredericksburg, or, what is your plan? And the most, and almost always they're like, my CPA has never asked me these questions before. And my favorite question to ask a couple, and I won't say which is which because it can depend, but is to have the couple in front of me and say, okay, and you're maybe getting close to retirement, right? And they want to sell the business and retire. I'm like, okay, well, let's talk about the business. Let's talk about retirement. Is retirement, we're flying to vacation on Southwest to go to San Diego, or are we flying on our jet to our villa in Italy? Like, what does retirement look like? Because
there's a difference.
Very different levels of funding. And, it's very normal that not both spouses maybe understand the value. Actually, it's very normal that neither spouse understands the true value of the business, especially after tax is paid on some transactions. But normally one knows a little bit more than the other. And very often the one who passes first is the one with the knowledge. And so I'm very, very motivated to help both spouses really understand that, so that, I've had this happen, there's a sudden event or a death or something, and now suddenly somebody who really doesn't understand at all has all this to manage, and they're overwhelmed, and it's on top of already dealing with the event that happened. It's just the worst thing that, it's,
Yep.
it's terrible. And they don't have trusted advisors because, sometimes they're not brought into all the
Yep.
conversations and they don't have that trust built. So very motivated to, to start those conversations as soon as possible. And where are you trying to go? So I can help you get there. Because if you think you want this for retirement, I'm telling you, your business is probably not there today. So may not be me to help you solve it, but I'm really good at issue identification,
Good term.
but I can understand, if you're an HVAC, go sell subscription, maintenance plans if you want to increase the value of your business, in addition to your construction work and your install work. But,
Create a recurring revenue stream.
but really go get a consultant in that space and I'll help you find one. But I know enough to be dangerous on it, but I'm not. So it's really finding out what matters to them. Do they want to have a charitable legacy? Do they want, I happen to work at that family office that I talked about. I watched the owner take a call from one of his companies that he'd invested in, that his son was working at, that his son had died of a drug overdose. Worst call I could ever watch, ever. Money can be amazing and money can be tragic. So my goal is to never have a client get that phone call again.
Yeah.
So I can be annoying, I am sure, when my clients are trying to ignore the forward-looking stuff, and I can see what's happening because I can see the cash flows. And
You will not ignore hard conversations.
I won't, and I won't let them. And they might for a while, and eventually, I have said before, like, look, if you don't want that from me, then we're probably not a fit. If you just want a tax return, you can get that done cheaper elsewhere for sure.
Right.
So I definitely will, and that's okay. It doesn't bother me a bit, right? I like right time, right place to everything in life. So I will fight, to make sure people are really thinking about that stuff. And I'll give that example to them. If they kind of refuse to talk about it, I'll give some examples of why it mattered and how it might matter. And hopefully that never happens, but let's make sure it doesn't, right? Does that?
So, it's so important. I mean, and part of the reason I kept kind of coming back to that statement and that comment is so many business owners are busy running their business, and they're just doing what they do. They're doing what they've always done. And we find that it is so important to be able to pull them out of that periodically and think strategically, think big picture. And, we've got kind of 4 pillars in terms of the way we think about it. But one of them is all the wealth planning personally. And then there's, on the business side, it's kind of the business processes and organization and then valuation. And trying to get them to be proactive and thoughtful versus just this scrambling. And then, the other part of the conversation is all of a sudden they decide to sell or they get a bid or somebody calls and it's time. And they're like, okay, now I need you to save me all this money. And you're like, it's kind of too late, like we should.
Well, they're also going to make less money because they didn't do the other stuff.
Right.
They're going to get a couple times less, PE multiple on it, at least.
Right. Because they didn't think about the value and how to optimize the value. And
they're doing everything.
Right.
So
I think it's, you're in a privileged seat. I mean, that, and your ability to impact valuation, from a business perspective, and then to impact, kind of net bottom line return or proceeds, from a, wealth planning and tax planning perspective is so valuable.
That does bring up one more hint when you said what experience do I have. This happened to me, maybe 6 months ago. A client literally was texting me his LOI. So people forget that they're already negotiating the very first time they take a call, right? On price, on structure, on, tax can make a 20% difference, just asset versus stock sale or whatever the options are. It can, how asset allocation works can matter 20%. So, but I think people often don't think they're already negotiating, and you're totally negotiating already. So they don't get their team ready ahead of time. Attorney, CPA, whoever, and a CPA who does M&A specifically. There's a lot of tax preparers, a lot of really good ones, but if you don't do M&A work, that's a whole nother ballgame. So I think I just see people get themselves, well, I already agreed to that. And actually I wrote my my MBA dissertation on the due diligence process, means at Ernst & Young overseas, and how it's really the head game is what that is. And so it almost always, it doesn't really do what it's meant to do, which is you dig in, you find out some data, okay, we need some adjustments to the numbers, and that doesn't happen because everybody's already, the LOI said this, it's a done deal. If we change it, screw them, we're not doing it.
Right.
So both ways, it due diligence ends up being a busted or don't bust it thing, but not the price adjustment that it's really kind of meant to be to some extent, because everybody's already emotionally invested at that number because they got to it before they even knew what it meant. And now they're all upset when somebody's trying to adjust it down because the numbers didn't prove out when you got in there and really looked at the detail, which is common. I mean, by the time everybody's running through their personal stuff through everything, it just doesn't pan out sometimes.
And I want to go there for a minute because Scott and I might start bombing you with questions. But one of our favorite exercises, Teryn, is you got 100, you got 500 CEO owners, business owners in a room. You just addressed it on that text LOI. Again, they're great at running an HVAC company, but this might be the first. Maybe they sell 2 companies, 3 companies. You've done hundreds, thousands. What are 1, 2, or 3? I own a business right now. I hadn't necessarily thought about selling it, but what are you telling business owners right now? What's 1, 2, or 3 things they've got to be doing before they even consider selling their business?
I mean, get your accounting ducks in a row, first of all.
Okay, well said. Shocked by that comment.
I know I'm
sure
I'm biased, but I mean,
it all comes down to money.
People don't understand the due diligence process, and the minute you give out something bad, you automatically lose trust. The buyer distrusts everything you then give them. From that minute on, we're like, well, you just print something out of your QuickBooks and throw it at them, which I've seen done a million times.
Yep.
You're already blew your opportunities. So, varying, some people are like, no, do I have to start getting audits before I go to sell? Not necessarily that. Just know that they're really good and know your numbers, know what they mean. So when you're talking to them, it's this. And again, that bifurcation, different divisions, business lines. I mean, heck, if you have a business and you have 4 locations and you don't even know which ones are profitable or not, you shut down 2, you might make more money and get more money in a sale times 10, right?
Yep.
So it's real money at stake. And if you just don't know, you don't know. And most of the times people don't know because they're running it very often on cash flow, right? People like the P&L, but they really don't like the balance sheet. So they don't like to look at that. Balance sheet's confusing, and I get it. But if your balance sheet's wrong, your P&L is wrong. That's how it works. It's a balancing act. That's how accounting works. That's wrong. That's wrong. So most people just operate on the P&L, and they don't really understand cash flow that well. They don't understand working capital that well. If you can get a lesson in some of those things ahead of time, have your CPA sit with you and explain it. Have them do a real look at your financials, not just for filing a tax return and trying to get as many deductions as possible, but really scrub them for management use. One, you'll be so much more knowledgeable when you go to talk to the buyers about your business and all the components of it, and you'll figure out how to save money because you'll be like, why am I spending money on this thing? I don't need that. It doesn't add any value to me. So you'll figure all that out by really diving into it. It's not what most people want to do. That's why they're not accountants. So you either got to do that or you got to outsource it, and then have a controller or CFO that you really can talk about this stuff that isn't just looking in the past to record it. That's your number one first thing. You got to know what you're doing to know what you can go sell it for. Right. And I think, unfortunately, that's hard for a lot of people. And they don't want to also invest the money to get a partner in that because it's money out of their pocket.
It's so interesting. And what happens there, I think so many business owners, they're not thinking about that exit in mind. So then when they get that phone call of interest, now they may not even be late to the game or even think to go get their financials in order. And then they, to your point, they go and they show up and in discovery and due diligence, they lose trust. And you lose trust, the value for sure is going down.
Yeah, or they gave up bad numbers, so then they've got a higher number in their mind. And so when they come back with the real number, they're frustrated and mad and upset, and which is okay, because again, the first deal isn't. But if they learn from that lesson, that's even good. Good. Now
Well
we clean
said.
it up. That's fine. We learn from everything.
Yep.
We learn from everything.
Oh, you mentioned earlier about you all figured out it was people, and maybe I want to kind of land us here. How did you start to understand how you would select the right talent? Is there a process? Is there a program? Is there what's the culture piece? What's the pragmatic there, Teryn, that would help other business owners? Here's how we began to vet, select, and fire people based on.
Well, values, first of all, right? I mean, it's hard. I mean, we get it wrong. We get it wrong sometimes. We think we're hiring a perfect fit.
We're messy.
People are messy. That's a good statement. HR side of the business is always messy. Yep. So, even when you think you haven't figured out, you don't have it figured out.
Yeah.
So, you do the best you can, but that whole saying, hire slow, fire fast, is good. We're terrible at it, for sure. Terrible at it. But the more you can do that, the better off everybody is. But, I think it takes a good 6 months to figure out if somebody's going to be a good fit, and sometimes a lot longer, right? Somebody was, and then something changed, in them or in you that caused it to not be a fit anymore. And I think, so we think feedback is a gift. We use the Gallup Strengths model to really talk about, if you're familiar with it, quick on it, is just that, most businesses go around saying, well, you're bad at this, you need to work at this. Instead of, you're great at this, go do more of this.
Positive affirmation.
It doesn't matter that I love basketball. I could spend 10,000 hours on it, and I'm not going to be good at it.
Yeah.
So my strengths are different things.
Yeah.
Could name them, but we don't talk about that. So really do that, and then, make it a team environment. So something we also worked on the team side, and public accounting is notorious for everybody kind of partners have their book of business and there's no sharing because everybody's compensated that way. So we threw that on its head as well. And we've never had partner comp just based on book of business because it drives really bad behaviors, right? You all try to hog the best people, get the most realization on your jobs. Means your rock stars are overworked and they leave. And so we long ago figured out none of that worked. So we changed all that. And I forgot where I was going to go with that. So
you were talking Gallup.
So really, just doing it differently, right? So we've built in a lot of processes about work sharing that is not common at other CPA firms because people are pretty possessive about their clients because there's a lot of knowledge client by client, but that doesn't mean 75% of it couldn't get done by somebody else. So we do a lot of work sharing even at the partner level, which is very uncommon at our firm. So just to make, it should be even, and it's a giant juggling act between people and clients and timing of when work's coming in as that filing season's going down. So even if you try to get it perfect, you'll never get it perfect. So if you can share it as a team, though, it doesn't feel bad, right? You don't have some people working 70 hours a week and other people walking out the door at 40. That's not okay. So we all share it, it works out. So just, supply demand curve stuff, right? That should tell you where you need to focus and the rest will come. It's been the theory.
Well, just your phrase, Teryn, feedback is a gift. That's flipping that on its head as well. Because again, generally feedback to most team members means you're going to tell me what I did wrong.
Right.
As opposed to just there's positive and negative.
Here's where we could improve that. So, I once had a manager tell me, they really weren't going to work with this staff person. They were no good. We're not going to work with them. And I said, well, that's okay. Then I need you to walk down the hall and let them go.
Yeah.
If you're not going to work with them, there's no point having them. It's like, well, absolutely not. I can't do that. I'm like, then go give them some feedback so they can learn. Because how would they learn? Otherwise, they can't read your mind. But really, most people have such hard time with difficult conversations, right? They cannot do it, even though it's for the benefit of everybody.
Yeah.
In a nice way, not
Yeah.
in a mean way. You can have every difficult conversation in a nice, caring, loving way. And sometimes the answer is still like not a right fit.
Yeah.
Right? A lot of people go into public accounting having no idea what it means
Right.
or what the job is. And then they get in and they're like, this really isn't for me. And that's fine. We'll help them find another position. All our clients are always hiring. So we almost always can figure out, okay, this isn't going to be where you can be successful, but let's find out where you can be
Yeah.
successful. So feedback is a gift. It's just, you have to. It's
You have to model it and receive it. Teryn, thank you very, very much. You guys have built an incredible organization. I know several of our clients are your clients,
Yes.
and they say, I would trust no one else with my business
it's quite a
besides the team. So grateful for you. Thanks for making time for us on Decision Points.
Thanks for having me.
Thank you.